Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is May 14, 2024. This is a Kickstart video where I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get started. The PPI data just released came in stronger than expected on a month-on-month basis, but there were revisions to the prior month, which sort of put things in line from a year-on-year basis. Nevertheless, yields are higher. We're seeing stock markets a little bit lower, and we saw the dollar move higher and then back down again. Let's go through what we're seeing specifically in the euro versus US dollar. Take a look at the 4-hour chart. You can see the current bar right here, and we did move lower to the higher dollar off of the release, but we've retraced most of those gains and heading back toward what was a key level, a key barometer that I outlined yesterday, which includes the 50% retracement. That's of this move to the downside from the high price here which is a March high, to the low price that we saw in April, the 50%, and the 200-day moving average. That's this green line right here. You can see it's overlaid right on the 50% level, coming at 1.07906, and that's going to continue to be the barometer in trading here today. For most of the day, we traded below that level, moving back toward it right here. We'll see if sellers lean against that level and push the price back to the downside just above it. We do have some resistance also against this swing area. This swing area goes back in time to, let's say these highs right here and this low right here, low, 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 low. And then returns to resistance here, and then move a little bit below here and move back to the upside. Wasn't so well, the last few weeks we did move above it here. This is the employment day where the price spiked to the upside here in the euro versus US dollar before rotating back to the downside again, using that level as resistance. In trading yesterday, the price did move above the high of this swing area of 1.08036, and maybe overall it increases this yellow area up to maybe that level at 1.0806. But so we need to get above these levels up here to increase the bullish bias. As you can see, we're seeing the euro versus US dollar reverse it, the declines, and now move higher on higher in this current hourly bar or 4-hour bar, and we're back above the 200-day moving average, 50% retracement. So buyers are making a play here in the euro versus US dollar and the volatility after the PPI data. Let's take a look at the dollar versus yen, and like the euro versus US dollar, we saw a little bit of a spike to the upside here, and trading to the highest level going back to this day right here, which is May 1st. In trading yesterday, the price moved back above the 50% retracement. That's of this move to the downside from the 1990 all-time or high price right here at 160.20. That got within 40 pips of the 1986 high price before rotating to the downside off of intervention and stuff like that. And since then, we've been building to the upside here in this pair. And yesterday, we moved above the 50% retracement level, which is a positive development. Tilts the bias more to the upside. We also moved above this ceiling area, which we had sellers against that 50% retracement here and here a little bit, and here a little bit, and here. It wasn't going down very far, but it was running into that 50% retracement until yesterday, when the price broke above that level, and we saw rotation higher, consolidating to the close, and then trading here today, which continued to move to the upside, using this level right here as a support right here. So that's all positive here. It's going to take a move below 156.28 just to give the sellers some hope, okay, that the bias is shifting to the downside, but we'd ultimately have to get below the 50% retracement level and the 100-hour moving average, by the way, to increase the bearish bias in this pair going forward. Otherwise, the buyers still remain in control, and especially since if we go to the 4-hour chart in this pair and take a look at that, the bias is obviously to the upside here in 2024. We did have obviously the big correction right here. By the way, the correction came right to this ceiling area right through here, where buyers came in against that level perfectly right here, forcing the price to the upside. So all this sort of bullishness in the dollar versus yen still persists for that currency pair. So sellers have to prove that they can take more controlled. Now, to finally take a look at the sterling versus US dollar, we're going to look at the hourly chart in this currency pair, and when we look at we see that the chart moved to the downside here off of the PPI data, came right back down to the 100-hour moving average. That's this blue line right here at 1.25216, and we're seeing the rotation back to the upside, retracing the full move to the downside here, and moving back to unchanged. Some volatile price action in here in this currency pair today. I think Pill's comment sent the price lower and then rotated back to the upside and then back down again off the PPI data and back to the upside. So lots of volatility in the sterling versus US dollar. Putting this on a 4-hour chart to get a look at what it looks like here. We do have the 200 bar moving average on the 4-hour chart, the 200-day moving average. We're back above that 200-day moving average. That's going to be a key barometer for this pair today and going forward. As long as the price can remain above that 200-day moving average, the bias remains more to the upside for the sterling versus US dollar. We do have this resistance up here near the 125.74 to 79 level. Keep that level at that area in mind going forward. And then we'll look toward the 50% midpoint. That's probably going to be a more important level. That's of this move down from this high going back to March to the low price that we saw in April. 50% comes in at 1.25957. We moved above it. An employment day right here, rotated back to the downside, and then moved last week's trading. The high price came right up to that 50% retracement, found willing sellers. So increase of that level is important going forward. This swing area right here between the 125.94 and 126.14 level is also key. That goes back in time, all the way back. You see where it comes from. So be aware of this area on the top side if we see further upside momentum, but stay above the 200-day moving average for more bullishness in the sterling versus US dollar. We're seeing yields come off a little bit. We're near unchanged. We're seeing, let's say, Dow futures are up 21 points in pre-market trading. The NASDAQ futures are now up, let's see, down 28 points on the day. There was a little bit, it was higher before the number, but coming off the highest or the lowest levels as well. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.